Hey traders from around the world, this is Jerremy Alexander Newsome with Real Life Trading. Hope you're doing absolutely sensational today. Today is indeed October 19th. I have no idea where 2015 went. It has moved fiercely. It's about 1:01 my time, 2:01 Eastern. So the market's going to be open for about 2 more hours, and then it will close. And it will probably close like this. Now keep in mind things are subject to change due to volatility, but it's an inside day candle, a small white candle with declining volume. So I would call this a 2-day pennant pattern. We'll probably end like this. And that means tomorrow, if we break higher, we're likely going to continue up a little bit more on the markets. And I think we'll hit the 100, almost a no-brainer. And then we're probably going to come to the 200 simple moving average on the DIA. Here's the SPY. Also, inside day candle. Myself and Carrie Ann and a few others, they have a 206, 207 bear call spread, which pretty much means we'll make $1 or $2 as long as SPY stays below 206. Now, the 206 is at, the 200 simple moving average is at 206.03. My thought, this one's going to get close. We're going to battle the 100 simple moving average a little bit this week. Tomorrow, probably a little bit on Wednesday. Likely break above it, probably retest. So carry on. You should be fine since yours expires this Friday. Then I'll have another week to wait. And I might just consider exiting it, depending on what the SPY does today. In the next few days, if we get a candle like this tomorrow, a big bearish candle, then I really won't worry about it. But I don't fully anticipate that happening. It's just going to be interesting to see. In fact, since last week, now this is just purely coincidence, just letting you guys know. I have no hand in what Yahoo Finance does. But I think it's pretty interesting that one of the main articles on Yahoo Finance as of today was forget 1987. Now we're talking about the slower, less severe, but still painful global crash of 2011 is the one that might have the most relevance for today's situation. Ha ha! Yeah! That's what we talked about on Friday. How cool is that? So just randomly that coming into impact. So if you guys are like, man, Jeremy's a nutcase, at least there's other nutcases in the nutcase with me. Right? So I think nutcase is one of those words that can be a plural and singular, I guess, depending on the sentence structure. Anyway, that's the general market if you want. Let's talk about some stocks that are reporting earnings. IBM. Here's IBM, and here are my thoughts regarding its gap. Now, this thought is going to be for both day traders and swing traders, but really here are my ranges as color-coded for you. I'm bullish if it opens above 154 tomorrow. Bearish if it opens below 148.26. But I don't, if it opens below in this general area, like 145, I'll still be a little bit bearish. But this gap action right there is going to cause a little bit of a concern like Morgan Stanley did for us today. Tried to take Morgan Stanley bearish out the gate, and you know what? We lost an R. That will happen a lot, actually. If we're bearish, if we open below 140, I'm bearish. And so when I say in this range, I do mean I want it to open in this range. If it opens right here, I'm going to be waiting on it because there's really a lot that it could do. Now, if it opens down at like 132.87, I'll actually be slightly bullish because that really would be a buy low, sell high scenario. So it'll be interesting to see exactly how that plays out. A lot of earnings this week, folks, so make sure to keep an eye out for it. I mean, there's going to be a lot going on. Amazon, I believe, has earnings this week, the 22nd, which I think the 22nd is the Friday, right, if I'm not mistaken. So the 22nd, there's going to be a lot of stocks on the 22nd. That's going to be the big day, which I think is Thursday, actually. And either before the morning or the afternoon, there's going to be a lot of stocks reporting. I think if Amazon forms some black candles before earnings and gaps up barely, it'll be very, very bullish. If Amazon gaps up huge like it did last time, I think it will fade like it did last time. I think if Amazon gaps down, it'll trade up, depending on how far it gaps down to. Kind of like, in a way, Netflix. Netflix did gap down, and I still am slightly bearish on it, but I'm longer-term bullish, meaning like short-term, I'm bearish along with Karen and a few others, and I'm kind of looking for some failure. The last analysis we had was on the 15th of October. If Netflix can retest tomorrow around 102 and fail, more bearish than bullish. So that's kind of what happened Friday and today. Anyway, Brian Shepard, another real-life trader out there, got some put sales down here at 80. He got $1.57 for those bad boys. They're much less valuable today. You can get about 50 cents for them. But if you want to own shares of Netflix, you could consider that particular price. Patricia's having some shares of Netflix. She brought in $2.39 for that covered call, just for understanding covered calls. Great job, Patricia. Apple not doing much at all right now. Apple's earnings are on the 27th, which won't be until next week. So we'll get to see how a few other tech stocks react, but we're still in a triangle pattern, so excited to see exactly how that breaks out and what it may or may not do. Twitter is battling the 100 simple moving average intently today, like a Helen of Troy type of battle. Its earnings, again, also not until next week, the 27th, and we got a little bit of a pennant pattern. If we open or start gapping above $34 on Twitter, I'm going to be slightly bullish in that scenario, believe it or not. Here is Yahoo. Don't know exactly what Yahoo's going to do. It's probably going to affect Alibaba a little bit. My boy Stan got himself a 28 November put sale. He owns some shares of Yahoo. Wouldn't mind owning a share or two more. Yahoo, I think it all depends on how high it gaps. If it gaps to the 100 simple moving average, I think it fades down a little bit. If it opens above the 100 simple, like 36, 37, I think it could run a little bit. So a lot of tech stocks reporting earnings this week. Intel reported earnings. This is the stock that we talked about in our fall portfolio as an inverted head and shoulders pattern. And I wanted to buy it on the pullback on the day of earnings. Well, there was earnings right there, and you had some really good opportunities for a pullback. If you did like a limit buy at $31, filled very, very nicely for you that day, and Intel has continued a little bit higher. If you didn't get a chance, like myself, to get filled on Intel because you had a trigger at 30.55, for example, then if you got a put sale for those who want to own shares at $30 expiring in November, that did have some decent premium the other day, and my next target at this point on Intel is about 35.29 after maybe a little bit of a rest comes in, and then ultimately maybe in a month or so we move a little bit higher. So if you have shares at Intel, I say hold. I think we have a little bit more room to go. Ladies and gentlemen, thanks so much for watching this real life stock review. As always, I truly do appreciate it. And until next time, which will be Wednesday, remember, love life, live life, and trade it. See ya.